Good morning, everybody. Hi, it's Jeff Fitzpatrick. It's Tuesday, the 4th of February, 2025. So, for a few weeks now, I've been thinking that Tuesday is probably a better day to record this video blog. Monday, the market is settling down. This week, I think it might not even settle down till we get beyond Tuesday because of the news on tariffs, which changed again with the months of delay for Mexico and Canada yesterday. So, nonetheless, there's still some very useful stuff to be done and to be said. So, let's get going. And as usual, I'm going to cover the market, my stock picks, and what's happening in respect of the investment clubs. So first, the market. And this is the S&P 500. You can see that we had 2 days of drops. Well, starting from a high, came down, and then again yesterday. There was some recovery. This is all to do with President Trump and tariff news. And I think that the market is quite happy to try and settle above the 6,000 mark, so above here. So I'm expecting a bit further recovery, although I'm sure there's a lot more bumpy stuff to come too. And my picks for the week. The process, you should be becoming familiar with it now. I look first of all to the charts and indicators, then at Better Investing and Zacks ratings, and then at the value line reports and comments. And then I go to the trading platform and see what's available in terms of puts and also the amount of stock buying power that the trades may use. I can then calculate an annualized return on investment. As far as the put is concerned, that allows me to rank what I'm doing and to be able to choose the the trades that I'm going with. And just to remind you again that where possible, and it's not always possible, I have a preference for end or start of the month expiring trades. We know we get a bit of a dip on the main Friday expiration day of the month, so I'm just avoiding that. I also like to get as much clearance as I can as possible. By clearance, I simply mean to have a strike price as far below the current price as I can get while keeping a reasonable premium. So it's a very different looking picture this week. So first of all, across on the right-hand side, I've got earnings dates, and these simply come from the trading platform that I use, and some of them are pretty close. So some of them I've chosen not to trade. I think I'm making an exception to that with Nvidia, NVDA. Although their earnings are due out on the 26th of February, I think that's just much less of an issue than what is going on with the tariffs. The other things that I like about it are, first of all, I can get a high premium, $4.15, and that's without negotiating. So looking at the spread, that's the bottom end of it. I might get more than that. But also, the current price, closing price yesterday, was $116.66, and I'm looking at a strike price $16.66 below that at 100. And the stock buying power isn't crazy for $4 of a premium either. That gives it an annual return rate of 97% and plenty of headroom. So I'm liking this. And while I'm not going to put the family farm on it on my shirt, I think definitely will be having a go. Then there's some more normal stuff. We've got Abercrombie and Fitch below that. That's the next one in line. Much lower premiums, but also much lower stock buying power usage and also much lower annualized return. Getting down then, BAH, if there is still stock buying power available, I might get to that one. Then I get further and further down to an annualized rate of sort of 20 in the 20s. I'm not really interested in those at all. However, they may come into the frame where I want to buy stocks, so I'll keep that in mind. And then also the four below that, where the earnings dates are a bit close. Some of those, yeah, I can keep in mind. So, for example, HAE let's see what happens with earnings on the 6th of February. So be careful with these. You need to replicate these figures and recalculate them at the time of trading. I'll do this several times during the course of this week. Okay, the clubs. I've mentioned in some WhatsApp groups that I am developing a new dashboard. So let's have a look at what I'm coming up with. And here it is. It's still a work in progress. I'm consulting on it. I'm trying different things and so on. So I've only done it so far for Fortune, and this is based on the position as it was at the close of business on the 31st of January 2025. Two conventions here. So where you see figures that are in blue, they are figures relating to that date. And that's what they are. Some of the figures are in grey here, and these are actually live figures. So I've got um, share prices in there that are 15 minutes delayed. So if this wasn't just on the 31st of January, they would be in blue. So they're grayed out for the moment, but normally you'll be able to look at this and these figures will be live. So let's have a little look at some of the stuff we've got here. A new title, first of all, trading statement. That's just to differentiate it from the dashboard that we've been using so far. Real value. So the real value is the value of the stocks at their current prices, the cash that is held, and the money that is due to come to the club, absolutely certainly, as options expire. So it's akin to left-in value, but it is actually a fairer and more realistic calculation of what the club is worth at this time. The broker adjustment, which you'll also see as the options drag on the old platform, that is what the broker is saying, hey, I need to hold some money back here in case stuff gets put to you. But that's not the case. We roll things forward, we do all sorts. So it's just not realistic to take into account. So that's the adjusted value, which would be known as net liquid value, but this is real value. We can then see how many months have elapsed. There's 46, 14 months remaining. And I'm also looking at the position as it's changed since the 1st of July 2024, when I changed the trading system. That's now 7 months ago. You got the average investment there if you're interested. I'm not. I'm really only interested in real money, if you like. In the month, this account had new investment of $10,000. Therefore, the total investment was now $298,752. So the gain so far is 18.5%. That's the real gain, $55,000. And if you want to take the option drag off that, you'll bring it down to 7%. However, the real gain since the 1st of July is 69,000. So significantly higher. And that's because we changed the trading system. So I'm looking at that going forward. The pipeline's got 42,000 in it. And if we wanted to close all of the puts, it would cost us 32,900. That's what I'm saying. There's no excuse at all for taking 34,000 off, even if you took 32,000 off, which would be the price of closing them. So the gain rate per month to date, 0.68 per month. Last month we were at 321,000. So in the month there's been 22,307. So that's 7.5% in the month of January. However, if you look at the gain since the 1st of July last, then we've got 3.2. This is per month. So we've got 3.2 per month. And then I've got a summary of the income, and new also is this projections. So these are not taking into account anybody's forecast. These are straight line projections. The higher one here, or the one at the top, I should say at least, is based on where we were going, based on the whole period to date, just moving that forward. And the second line is looking at it at the rate we've been increasing at since the 1st of July last. So in 60 months' time, we expect to be worth, would have had an increase of 93%. Sorry, that's not even 60 months. That is uh, at the end of 5 years. So that's where we're expecting to end at the moment. If members decide to leave their money in and keep it going for a further 5 years, then we're looking at 292% based on the way we trade now. That would take it to 1.25 million plus. Below, I've got the stocks that are held. And this time, though, I've got in the income that we've had per share, the value, the exposure, and the percent of our overall exposure. So, for example, 8% of the stocks that we hold are in AEO. So some of them are a little bit high. I've got Nike there, 12%, and 13% on BP, but that's probably as high as I want to get. I should be looking to bring those down in due course. I've then got the unexpired puts. You can see what's happening with those. And interestingly, I've got the potential income. So that's if the put isn't put to us and we just retain all of the premium. Then I've got the current income. That's at current prices. So at current prices, I would expect to have some stock put to us and to it's based on selling that then immediately at the price that it stands at the time when it's put to us. And if we did that, so it was put to us or sold it straight away, we'd have 36,815 versus the 40,325. I've calculated the option drag that the brokers are using to pull us down. That's there. And I've got the same for calls. So again, potential income if the stock isn't called away from us, and based on what would be called away from us at current prices, slightly below that, 414 below that. And also, again, I've calculated the option drag. And at the very bottom, another quick summary. The value of the shares we own in this club, 226,000. Amount of cash, 128,000. The total value, that's the figure you saw at the top. Then we've got the value of assets and cash less the option drag. That's what the brokers reduce it by, and that's where you get that 319. There's a little diversification word there. That's to be an additional area on this going forward. So that's where I'm at. A lot of work to do in it still, and some consultation. I expect to finalize this in the training at Dublin. And here is what I'm looking to cover at the conference. How we're working towards 10% per month. That's the ideal. I don't know if we'll ever get there, but we're certainly moving towards it. I'm looking at a replacement or updating, I suppose, for the TICN 4x4 scoring system. That will run alongside the existing one, but it'll be instant. Press of a button and you'll get 8,500 stocks analyzed to find the 4x4 stocks rather than relying on people to find them and put them forward. The revised dashboard, you've just been looking at that, and automatic screening for TICN high scoring stocks, additional tools such as those from Better Investing and Zacks, special guests coming in via Zoom from the USA, and live trading and trade management, and some new trading record templates that I'm also in the process of developing. So you can book for that at myinvestmentclub.co.uk. There's a button on the front page. And I'm holding the special prices for the moment. If you want to pay for it out of your club account, then that's great. And we can help you do that. Just say the word. And I hope to see you. We're at the Carlton Hotel, near Dublin Airport, on the 21st, 22nd, and 23rd of March. And I'm sure there'll be a good night out in Dublin to be had on the Saturday night. It's worth going just for that. If you're in my Facebook group, thank you for that. If you're not there yet, please join it. And I do put things in there. Hopefully, it's worth being in. And if you're not already a member of one of the investment clubs, again, go to myinvestmentclub.co.uk. You can find out a lot more information about it and join there. Or contact me if you want to talk about it. Very happy to do one-to-one Zooms or to answer any questions. You can bring as little as £100 a month, or you can put in as much as you want. And there are plenty of people putting over 100,000 in as deposits. But the good thing is they get the same percentage return as those people who put in $100. Well, I think that's about it for this week. So I shall see you again next Tuesday. Thanks for listening.